For this session, we will talk about one of your systems in your government accounting manual, that is your disbursement system. So in this disbursement system, of course, we will learn about the different disbursement authorities, how to account for the disbursement authorities, and the disbursement itself. So let's start and discuss first what is your concept of disbursement, and then we will go and discuss the concept of your disbursement system and different modes of disbursement. So let's start and define disbursement. So what is disbursement? So disbursement constitutes all cash paid out during a given period, either in currency or cash or by check. Actually, by this definition, you have already and you have an idea on how disbursement is made. So disbursement is through cash or through check. However, ultimately, there must be a cash paid out. Cash paid out. Another definition of your disbursement is the settlement of government payables or obligations by cash or by check. So what happens here, if you still remember your registry RA-OD, okay? Registry of your allotment, obligation, and disbursement. So here, what happens here is that you record the obligation as to a particular allotment. So once that obligation is now due and demandable, then we need to pay it through a disbursement. We need to pay it through a disbursement. Therefore, to settle that obligation, you will now disburse. And how will you disburse? You disburse either by cash or by check. Another, a disbursement must be covered by your disbursement voucher, petty cash voucher, or your payroll. So generally, these are your disbursement documents. Disbursement voucher, petty cash voucher, and your payroll. Now, the typical transactions for the disbursement includes the following. First, a disbursement for current operating expenses. And normally, your current operating expenses, you know this one, the three items of your RAOD. So first, your personal services. Most expenses for disbursement or most obligations for disbursement on your PS is composed of your compensation, your salaries, or your wages. So these are normally the amounts that you account for whenever you disburse the disbursement for personal services. Another for current operating expenses, we have your maintenance and other operating expenses, or your MOOE. The most common MOOE expenses that an agency or a government entity incur are your traveling expenses. So that is part of your MOOE. Some are your materials, including your repairs. Okay, so whenever you are already obligated, take note. Um, the concept of your disbursement is there is an obligation that you need to pay. There is an obligation that you need to pay. It is not because of an expense. You already know it's when we say disbursement, it's not only about expense. It's not only about expense. It's about an obligation. It's either an obligation because you need to pay a liability, or an obligation because you purchase, and or an obligation because of a particular expense. So anything that needs disbursement of cash, we account here under your disbursement system of your government accounting manual. So we're done with PS and MOOE. We go now to another operating expense that is a typical transaction of your disbursement. We have your financial expense. So some are most common financial expense, of course, is your interest and any other bank charges. So those are some of your current operating expenses. Next, we have your capital expenditures, or you know this one as your capital outlay. So these are expenditures that need allotment for your capital outlay. You already know that in your RAOD, right? First, there must be an allotment. After that allotment, there is an obligation. So here, the allotment and obligation comes, the allotment is for your different types of your RAOD. These are your RAOD PS, RAOD MOOE, RAOD FE, and RAOD CO. Now, once there is an obligation, you need to disburse it. And when you disburse, again, what are the items? Items of PS, MOOE, items of FE, and items of capital expenditures or your capital outlays. General examples of your capital outlays under your government accounting is your investment and procurement of your assets. So normally, investment and procurement of assets. So that is the most common example of your capital expenditure. And then last typical transaction of your disbursement is your interagency fund transfer. So this is the transfer of funds to other agencies for the implementation of your specific projects. You already know that we can realign. So what happens is you can transfer your fund to other agency. Also, you can transfer fund from one regional office to another. So an interagency fund transfer, of course, need a disbursement because you disburse a cash to another. So that is now taken up in the books as due from, and then you credit your cash. So generally, your entry here is due from, and then you credit your cash. Your due from is a receivable account. So due from, let's say agency A, and then you credit cash MDS. Okay, depending if ever that is through cash, or so you can pay your agency through a check. You can also pay through commercial check. Okay, so we will discuss that later as we go through the different modes of disbursement. But what is clear now in our disbursement is that we must pay out a cash, and normally the transactions are within your RAOD. So PS, MOE, FE, and your CO. One thing that is not within those items is whenever we try to realign our fund and give it to other agency. We call that your interagency fund transfers. Now, let's look into the concept of your disbursement and your expenditure. So, what is the difference between disbursement and expenditure? So, an expenditure are obligations incurred by the agency. So, includes both the amount actually paid and those recorded as liabilities to be paid in the future. Therefore, expenditures can either be paid in cash or an open account, while a disbursement are payments. Any payments need not an actual expenditure as long as there is a payment. So I hope we're clear with that, and I hope you know already that difference ever since, of course, you started accountancy. Expenditures or expenses is different with your disbursement, especially now because this is one of the systems or one of the four systems of your GAM. Now, let's have a recall on your fund release documents. You still remember that your fund release documents for your obligational authority are your ABM, Agency Budget Matrix, or your General Appropriations, or your Special Appropriations. Now, in your disbursement authority, we have the following. We have your notice of cash allocation, and we have already discussed that during our different allotments, appropriations, and obligations. Then we have your NCAA, Non-Cash Availment Authority, CDC, Cash Disbursement Ceiling, and NTA, Notice of Transfer of Allocation. So what are the basic requirements for disbursement? So the first requirement is the existence of lawful and sufficient allotment certified as available by the budget office. So there is a sufficient and lawful allotment. You already know this one because of the relationship in our registry of your RAOD. What did we say? Your allotment must be greater than your obligation, and your obligation must be greater than your disbursement. Therefore, all of the amounts you can be obliged must be sufficient or must be within your allotment, because this can be greater or equal to your obligation, but your obligation cannot be greater than your allotment. Okay? The rule is the obligation cannot be greater than your allotment, but your allotment can be greater or equal to your obligation, because you must only oblige up to the amount of your allotment because of our CDC. That is your ceiling. That is the ceiling that you can expend or spend for the government agency. And take note, not only that there is sufficient allotment, this must be properly certified by your budget officer to show that there is really an existing allotment for that particular obligation. Number two, existence of a valid obligation certified by the chief accountant or head of accounting unit. So here, there must already a valid obligation before you disburse. So you make use now of your allotment, and you will now oblige the agency for a particular item of your different raod, either PS, MOOE, FE, or CO. And this must be certified by the chief accountant or head of accounting unit. Third, legality of transactions and conformity with laws, rules, and regulation. So generally, under your government accounting or in accounting for disbursements, before we enter into an obligation, the entity must first go into a bidding process, and the government will only procure the lowest amount of your bid. So that is one of the legality. And aside from that, it must be properly supported by your documents and all. Fourth, approval of the expense by the chief of officer or by his duly authorized representative. So it will not end with that bidding process. There must be an approval about that incurrence of expense. And lastly, submission of proper evidence to establish the claim. So generally, these are your different official receipts, including the required disbursement voucher, and aside from that, any other required documents. Now, let's look into the concept of your disbursement system. So what is a disbursement system? A disbursement system involves the preparation and processing of disbursement voucher, preparation and issuance of check, payment of cash, granting, utilization, and liquidation or replenishment of your cash advances. So what's the first one? There must be a preparation and processing of your disbursement voucher. And after that, you will now disburse. How do you disburse? First, either preparation and issuance of check. So this is known as your disbursement of check. Next, payment of cash. This one is known as your cash disbursement. Third, we have your granting, utilization, and liquidation of your cash advances. So that cash advances actually is part of your ADA or your advice to debit account, or sometimes we call this one as your cashless payment. Cashless payment. Okay? So first, on the process of your disbursement system is the creation of your disbursement voucher. So disbursement voucher, of course, shows the lawful disbursement. Aside from that, the validity, the propriety of the disbursement, and the certification that, of course, that particular fund for that disbursement is available for the purpose it must be used. Remember, if ever one is allotted for that particular expense, that is only the amount you can work into. I hope you're clear with that, with the relationship of your allotment obligation and your disbursement. So therefore, you must only work on that. And from time to time, there must be a certification that a particular allotment or amount is available or sufficient to cover that expenditure, as we have discussed a while back in your basic requirements. So the preparation of your disbursement voucher, of course, is a clerical work. What we normally account as your accountants are the disbursement and the recording of your disbursement. So as early as now on your disbursement system, you can see the three modes. What are the three modes? The preparation of and issuance of check or check disbursement. Another mode, the payment of cash, that is your cash disbursement. The last mode is your granting, utilization, and liquidation or replenishment of your cash advances. We call that your cashless payment. So what are the requirements and certifications for disbursement? So we already know that it must follow a certain process. So we have a while back the basic legalities. Now let's look into the certification so that there is a valid disbursement. So the budget officer, of course, certifies the availability of the allotment, that there is an available amount of your allotment. As we said a while back, there must be a sufficient and lawful allotment that will be certified by the budget officer. Next, the chief accountant. What will the chief accountant certify? It will certify the availability of funds and the completeness of the supporting documents. Why? What did we say a while back as a basic requirement? There must be an existence of valid obligation. Okay. So when can we say there is a valid obligation? If the funds are available for that and the supporting documents are also available for that. Remember that as a basic requirement a while back? Next, what will the head of requesting unit certify? The head of the requesting unit certify the necessity and legality of the disbursement. So when we say necessity and legality of the disbursement, remember one of the basic requirements a while back, there must be a conformity with the law, rules, and regulations. So this talks now about the conformity with your law, rule, or your regulation. And the last certification that you need for the disbursement is the certification by your head of agency, which now approves the disbursement vouchers, including your payroll. Okay? So that is normally the process. Okay? So budget officer will look if ever there is an available allotment. Now the chief accountant now certify the availability of funds and the documents. The requesting unit must show proof of the legality of the disbursement. And then lastly, that disbursement voucher must be approved by the head of the agency. So how do we record your disbursement? So in recording your disbursement, you record it in the appropriate route. So where do you record your PS? You record it in your route PS. Where do you record your FE? You record it in your route FE. Where will you record your capital outlay? You record it in your route CO. Where do you record your MOOE? You record it with your route MOOE. Okay, if you still remember, before you will create an obligation, it must be supported by your ORS. And then, once there is a disbursement, what is the supporting document for your disbursement? That is your disbursement voucher. So, in recording of your disbursement, unlike in your appropriation allotment obligation, what we do there is normally what we make use are your registries. Now, in your disbursement, we make use of your registry, primarily your RAOD, and we will make use of your books, primarily your cash disbursement journal. However, if certain items cannot be recorded by your cash disbursement journal, then we record it to your general journal. And I hope you still know how to record items under your cash disbursement journal, as you have learned before in your basic accounting. So modes of disbursement. So a while back, we said there are three modes of disbursement. What are the three modes again? First, check disbursement. Next, cash disbursement. And lastly, cashless disbursement. So how do we disperse the government fund through check? So the government fund is dispersed through MDS check. Do you still remember what is an MDS check? MDS check is your modified disbursement system check. And then, aside from your MDS check, you can disburse the government fund through commercial check. You will see later on the difference between the two. When we say difference between the two, what fund do we make use for those checks? So what fund is used for MTS and what fund is used for your commercial check? Next, by cash. So whenever it is through cash, that is through a cash advance and also through a petty cash fund. And then lastly, we have your cashless payment. We have your ADA. This is known as your advice to debit account. We have your MDS, that is your electronic modified disbursement system. Sir, why is it cashless? Because you don't get cash already from the fund. Ultimately, the amount or the cash will not be shown into the books. It's like what happens here is like there is an entry of payment. However, the payment is not through cash. So we call it cashless. And then next, we have your TRA, your tax remittance advice. And then lastly, we have your NCAA. If you still remember this one, we have your non-cash availment authority. So let's discuss first your check disbursement. So in your check disbursement, checks shall be drawn only on duly approved, of course, disbursement voucher or your petty cash voucher. It is reported and recorded in the books of accounts only when actually released to the respective pays. Remember this one. You record disbursement not only to the registry itself, but also you record the disbursement to the books. And the books normally used here is your cash disbursement journal. So let's first discuss your MDS check. Your MDS check is covered by your notice of cash allocation. Your MDS check is covered by your notice of cash allocation. If you still remember, when we talk about notice of cash allocation, this is the authorization issued by your DBM to the government agency to withdraw cash from the National Treasury. Okay? So if you still remember, what is the entry on your NCA? Cash, MDS, and then we credit it. We credit subsidy from your national government. So the amount or the fund in which we draw the check comes from your notice of cash allocation. Okay? That is your MDS check. And it is chargeable against the account of the Treasurer of the Philippines. Sir, why is it chargeable against the account of the Treasurer of the Philippines? Because, as you can see, we have your cash MDS, which comes from your Bureau of your Treasury. Sir, what happens here with your MDS? We thought that the cash is really held by the organization or the agency itself. So actually, the treasurer maintains your different MDS. It maintains the different MDS. So whenever we issue your MDS check, it's as if the BTR is the one who pays it because the BTR is the one who maintains that MDS. Okay, I hope we're clear there. That's why it is chargeable against the treasurer of the Philippines. Take note, covered by MCA. And how do we pay whenever we issue MDS check? We pay through debiting the asset, expense, or liability account, and we credit cash, MDS, regular. We debit asset, expense, or liability, and we credit your cash, MDS, regular. Now, we go with another disbursement of check. We call this one your commercial check. So your commercial check is covered by your income or receipts. What are these income or receipts? These are the income or receipts of the agency itself, which is now authorized for deposits meaning these are your income or receipts deposited already to a particular commercial bank. Now, what happens here? When we say commercial bank, normally what we will make use here are your AGDBs, your authorized government depository bank, AGDBs. AGDB, authorized government depository banks. So what happens? Again, the agency will have an income, and this income is now authorized for deposit with that AGDB. So the funding of the check will come from that particular income or receipts, unlike from your MDS check. When we use MDS, always remember MDS comes from NCA, because at the time we record the NCA, we debit cash MDS and subsidy from national government, meaning the MDS is now the MDS is now maintained with the Bureau of Treasury. So therefore, whenever we issue your MDS check, it is chargeable against the Treasurer of the Philippines. Now, how about your commercial? Where do we charge it? We charge it against the agency checking account with, of course, your servicing bank. So whichever government servicing bank is that. Okay. And how do we record it? We debit the asset, expense, or liability, and we credit your cash and bank current account. Okay, so the difference are here. MDS check is covered by NCA, while your commercial checks are covered by your income or receipts of the agency itself. MDS check is chargeable against the Treasurer of the Philippines, while commercial check is chargeable against the agency checking account to the GSB or government servicing banks. And MDS check is credited to cash MDS regular, while your commercial check is credited to cash and bank current account. So that is your check disbursement. How about your cash disbursement? So cash disbursement shall be made through a cash advance or a petty cash fund. So let's start first with a cash advance. So therefore, there are two processes that you will undergo in a cash disbursement. First, you create an advance account, and second, you record the payment. Okay. So first, you debit advances for whichever is that particular cash advance. So let's say advances for travel. So advances for travel. And then you credit cash MDS. Cash MDS. So therefore, your cash disbursement normally comes from your NCA. Normally comes from your NCA. Sir, if the fund for our cash disbursement for the advance comes from the revenue or receipts? What if the advance comes from your revenue or receipt? Then you change the credit account. Your debit now is advances for, and then you credit cash in bank. Okay? You credit the cash in bank. Next, we record the payment. So when we talk about the payment, this is now the usage of the cash advance. Usage of the cash advance. So we debit the asset, expense, or liability account, which you will pay, and you will make use now for the advances for. Okay. So what happens here? There is a cash set aside for a particular purpose. However, how does your government accounts for that? It does not account for it as a particular cash fund, but it accounts for it as advances. Take note of that. Because under normal rules or under the commercial rules or under PFRSS, whenever we set aside cash for a particular purpose, our entry is a debit to a particular cash fund. So let's say revolving fund or petty cash fund or whatever fund is that. We set aside the cash. However, under your government accounting, we don't account it as just like how we account for cash in your commercial purposes. We account for it as a cash advance. So the fund is treated as a cash advance for a particular purpose. So for example, the purpose is travel. We debit advances for travel instead of travel fund. So everything that we use for cash disbursement is treated as an advance, not as a fund. The exemption for this is your petty cash fund only. But generally, it is treated as an advance. So in our example, advances for travel instead of travel fund. And whenever we use already that advance, then we credit it. So you debit the, let's say, your transportation expense and you credit the advances for travel. Okay? I hope we're clear as to your advance and your payment. So normally what happens here is there will be a liquidation of the cash advance. So whenever there is a liquidation of your cash advance and there is an excess, what we do is we will just reverse the entry. So let's say there is an excess, so cash MDS, we credit advances. So whenever there is an excess. Sir, what if let's say your advance is 30,000. Let's say your advance is 30,000 and what you paid only is 20,000. So you need to reverse the 10,000 advance. But what if the amount of your advance is lesser than your actual? So let's say you advance 30,000 but your actual is 5,000. So the 5,000 now will become a normal obligation. The 5,000 or the excess will now become a normal obligation and that obligation can be satisfied again through your check disbursement. It can be satisfied through a check disbursement. How? By paying the liability account for that. So the accounts payable, let's say, for the driver, let's say, for the transportation, accounts payable, let's say 5,000. And then we credit cash MDS 5,000. Or through a commercial check. So we debit AP and then we credit your cash in bank 5,000. Okay? So that's how we treat it. So whenever there is an excess cash advance, you note that in your liquidation report. And what we normally do here is that we claim or we revert back the cash MTS. But if ever the advance is lesser than the actual, then there must be a reimbursement. Reimbursement. And how will we record the reimbursement? It will be now treated as an obligation of the entity. And the obligation can either be disbursed through a check disbursement from the MDS check, so AP and cash MDS, or a payment through your commercial check, so AP, cash, and bank. Finally, we also have a report of disbursement for your cash disbursement. Why? Because there must be a liquidation report of our cash advance. So take note, once there is a cash advance, there must be a liquidation report on that cash advance. And what is the effect of your cash advance liquidation report? There might be an excess or there must be a reimbursement. So those are the two tenses that you might encounter whenever there is a cash disbursement. Next, we have your PCF disbursement. So under your PCF disbursement or your petty cash fund disbursement, what happens here is there is a separate fund which is set aside. So normally we will make use again of our MDS checks. So cash MDS regular is our credit and we debit petty cash fund. Take note, what we need to determine whenever you disperse through check is that you look as to the disbursement authority. If the disbursement authority comes from your notice of cash allocation, then you use MDS check. But if the disbursement authority does not come from your notice of cash allocation, but comes from the agency income or receipts, then you can use a commercial check. So here in your petty cash fund, of course, it is set aside for your emergency and your petty expenses. So what are the rules on your petty cash fund? For sure, you still remember how to account for your petty cash fund under your financial accounting. So normally, we follow the same rules. However, these are some of the specific rules under your government accounting. First, you directly charge it to the appropriate expense accounts whenever you make use of the petty cash fund. So it is more like a fluctuating system. Next, equal to the total cash on hand and the unreplenished expenses. So your petty cash fund must always equal to the cash on hand on that particular petty cash fund, including any expenses paid on your petty cash fund. Still, that is the same rationale for your petty cash fund under your GAP or your PFRSS. Third, not be used to purchase regular inventory items for stock, nor for the liquidation of outstanding cash advances. Why? Because we said you only make use of your petty cash fund for your emergency and your petty expenses. And then lastly, it is used only for disbursement, which cannot be conveniently paid by check. So if ever it will take too long to prepare a disbursement voucher for the check, then you can use your petty cash voucher and you can pay using your petty cash fund. Okay? Now we go to our third mode. So we already discussed two modes. First, the check. Next, we have your cash. And then lastly, we have your cashless. So first, we have your ADA. So ADA is an accountable form used an authorization issued by a government agency to the MDS GSB instructing the bank to debit a specified account from its available NCA to pay the creditors or payees listed in the LDDAP ADA. So we call that one as release of due and demandable accounts, ADA. Okay. So what happens here? You will now directly issue to the MDS GSB. So a while back, what we do with your check MDS, okay? With your MDS check, what happens is that the agency will pay through directly to the creditor. To the creditor. So you will pay directly to the creditor or whoever you have an obligation. However, difference with your ADA is that instead of the agency paying the creditor, there will be an intermediary. So what will happen? You will just give an authorization to the MDS Government Servicing Bank, and the MDS Government Servicing Bank will pay the creditors. So instead of disbursing it directly, this one is direct disbursement to the creditor. What happens in your ADA is a disbursement through an authorization from the agency to the creditor. Okay? So agency authorized MDS. MDS now will pay the creditor. Okay? What is the source of the obligation? The creditor payees are listed through your LDDAP. What is LDDAP? List of due and demandable accounts payable. Okay? List of due and demandable accounts payable. LDDAP. I hope you can see the difference because they have the same entry, right? They have the same entry with your MDS check. The difference here is here in your MDS check directly, the payment is to the creditor. In your ADA, there is no cash issued by your agency. What happens is an authorization and transferred directly from MDS GSB to creditor. So agency to authorization to creditor. Unlike with your MDS check, it is only agency going to the creditor. I hope we are clear as to the difference of your ADA and MDS check. Next, we have your TRA or your tax remittance advice. So what happens in your TRA? The TRA is used to recognize three items. So 1, 2, and 3. So the first one, in the books of the National Government Agency, the remittance to BIR and BOC of taxes and customs duties withheld, and the constructive receipt of NCA for those taxes and custom duties. Okay, so you record the constructive remittance and the receipt of NCA for those customs and duties. So you credit here, of course, the notice of cash allocation. Whenever we have a notice of cash allocation, the credit, of course, is a subsidy from national government. And now we record the constructed receipt of your tax withheld. Okay? Constructive receipt of tax withheld. So we debit the cash and we call that your tax remittance advance. So your entry for number one, therefore, is a debit to cash tax remittance advice and a credit to subsidy from national government. Sir, why will we debit cash tax remittance advice? Because that is the constructive receipt of NCA for those taxes and custom duties. And then lastly, the constructive remittance. So whenever there is a constructive remittance, we now debit a due to BIR. So you remit as if the cash TRA. So credit, cash, tax, remittance, advice. Okay? So that is for entry number one. Remember, the first one is the constructive receipt of NCA, and then the constructive remittance to the BIR or BOC. Sir, what if it is BOC? You change this one to due to BOC. Clear? Okay. Next, in the books of the BIR and BOC, the constructive receipt of tax revenue and custom duties. Okay. So, on the first one, it is the entry on the agency. The second entry is the books of BIR. So, in the book of BIR or BOC, what is our entry? A debit to cash, tax remittance advice, and then a recognized income due to tax. So that is your entry. So books of the BIR and BOC, the receipt of the revenue through a cash. Okay? That is for the second entry. And the third entry is the book of the BTR, the constructive receipt of the taxes and custom duties remitted. So the last entry is the book of the BTR, which now records the constructive receipt of the remittance. Okay? So this one, that's the entry. That's the relationship. The relationship of the due to BIR and cash TRA is to the book of BIR and BOC. How about the relationship of the first entry? The first entry has a relation to the last entry or the third entry, which is the book of the BIR. So we have subsidy to national government agency, and then you credit cash TRA. Okay? Again, the first entry, an entry for the BIR BOC and a constructive receipt of your NCA. The second entry on the book of the BIR or BOC, the constructive receipt of the cash and the recording of the income. And then lastly, on the books of the BDR, the recording of the taxes and custom duties as NCA. So to subsidy to NGA, a debit, and a credit to cash TRA. Next, cashless, we have your NCAA, so Non-Cash Availment Authority. The NCAA is the authority issued by the DBM to agencies to cover the liquidation of their actual obligations incurred against available allotments for availment of proceeds from loans or grants through suppliers' credit or constructive cash. So what happens here? There will be a grant of loan and there is a receipt of NCAA by the agency. So take note, there is a proceed from the loan. So we record that. And we make use of that proceed of the loan as an allotment. We call that one as your non-cash availment authority. So the grant of loan, this is recorded in the books of the Bureau of the Treasury. So we debit subsidy to national government agency and credit to loans payable because we have a liability. And then whenever we now receive the NCAA, the agency will record accounts payable or expense, and then subsidy from national government. So this must be subsidy from national government. Okay, so that's how we record your cashless NCA. So let's recap what we have learned. So we have now your disbursement system. So there are three modes of disbursement. First, we have your check. Your check can be disbursed through your MDS check or your commercial check. The fund of your MDS check is your notice of cash allocation, while your commercial is your revenue or receipts. So whenever we record your MDS check, we debit your disbursement of cash MDS. So whenever we have your MDS, we debit your expense or liability or an asset account, and then we credit cash MDS regular. If that is a commercial check, we debit the expense, the liability, or the disbursement, and we credit your commercial check, cash in bank. Another mode is through cash. When we talk about your cash, it is either as an advance or a petty cash fund. If that is an advance, the disbursement is either through MDS check, so advances for blah blah blah, and then credit cash MDS. And then if ever it is through commercial, then we debit advances for, and then we credit cash in bank. And then what do? We try to liquidate the advance. If there is an excess, you need to reverse. And if there is a reimbursement, account for it as a disbursement of check. For petty cash fund, we record your petty cash fund as follows: a debit to a petty cash fund and a credit to cash modified disbursement system regular. And then lastly, we have your cashless. Under cashless, we have two items. The first one is your notice of cash uh, availment authority. By the way, three items for your cashless. Notice of cash availment authority. In your notice of cash availment authority, we record first on the books of the BTR the constructive receipt of the loan, so subsidy to national government agencies, and then credit to your loan payable. And then the agency will record now a payment to your asset, liability, or expense, and you will record a subsidy from national government. Next, we have your ADA. Your ADA is like your MDS check. So we have here cash MDS as a credit and a debit to your expense or a liability or an asset. However, remember the relationship in your ADA. First, the agency, then there will be an authorization to the government GBS, government banking system, and then ultimately payment to your creditor or payee. And then the third one, we have your TRA. On the first entry, what we do is we record the constructive receipt of your CA, so cash, TRA, and then credit subsidy from national government. And then, aside from that, we will record now the remittance of the taxes withhold, so due to BIR, then cash TRA. And then, this cash TRA is also recorded to the books of your BTR. So how does the BTR record that? It records subsidy to national government and a credit to cash TRA. And then this constructive remittance is also recorded by your BIR. And how does the BIR records that? It records it as a debit to your cash TRA and records now the income. Records the income. So a debit to cash TRA and a credit to income. So those are the different modes of disbursement and the disbursement system of the national government.